The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations. To determine which investments may be appropriate for you, consult with your financial advisor. Do you have life insurance? According to new research from Corebridge Financial, 47% of Americans with life insurance policies feel confident their spouse or dependents would be able to manage financially without them, compared to just 28% of those without policies. 4 in 10 Americans reported costs as the top reason for not buying life insurance, and 21% say they have more important financial considerations. In light of Life Insurance Awareness Month, joining me today to talk about life insurance, what it is, and how it can benefit you while you're still living is Norm Bald, Director of Life Operations at M&O Marketing. A lot of people think the purpose of purchasing life insurance is to make sure your loved ones are taken care of financially if something should happen to you. But you can actually benefit from it while you're still alive. Can you explain that?
Yeah, absolutely. First of all, thank you for having me. A lot of people do think that life insurance is simply for those people that once they pass away, they're going to receive a benefit and that's about it. But they don't realize that there are these living benefits, which are also called accelerated benefits. You might hear that term. And essentially what it is it's the ability, a lot of the policies today, most of them in fact, have the ability to advance a portion of the death benefit for certain medical issues. So typically it's a terminal illness, a chronic illness, or a critical illness. And so one of those three, if they trigger that, they can advance a portion of the death benefit tax-free.
Why should people look into life insurance, and who's it for?
Well, I think in general, the population as a whole is underinsured. So I think definitely it's worth looking at. You should probably be talking with your insurance agent to look. But I think that for most people, there definitely is an insurance need. As far as who it's for, it's everybody from the young family starting out who need income protection all the way up to the retired individuals that have money that they're planning on passing on to the next generation. And with the stretch IRA no longer an option, life insurance is a great way to pass those assets tax-free to the next generation. So really everything from the young to the old and everywhere in between, and that's where those living benefits come back to, because those near retirees or recently retired, that is a great fit for them. So to qualify for those living benefits, you have a terminal illness typically on there, which means that if you're, according to a doctor, you have, and it can vary by carrier from 6 to 24 months, but essentially if you have a very short time to live, you've been diagnosed with something terminal, they'll allow you to advance a portion of the death benefit. With a critical illness, that says that if you have, let's say, cancer, certain cancers, invasive cancers, a heart attack, and there's some other things similar to that, but if you find yourself in that position, you again can advance a portion of the death benefit.
Okay.
And each policy will spell out how much of the death benefit you can advance. And then the third one is the chronic illness, which also fits in the bucket with long-term care. Most people are familiar with long-term care. What they might not realize is that long-term care doesn't mean just care in a facility. It could also mean you need care at home. You need somebody to come into the home, take care of you, maybe even maintain the house, things like that, as well as assisted living and everything in between. So that's your chronic illness long-term care, and that's usually the most severe, and that's the one that will allow you to advance a portion of your death benefit, either as a lump sum or you might decide to receive, and depending on your policy, a monthly benefit.
Some people use life insurance as like a tool in retirement planning or to like supplement income. Can you explain how that works?
That is a very common use of life insurance, and probably one of the number one uses for life insurance. So there's something really neat about life insurance that few other products offer, and that is the ability to take tax-free income out of the policy. So life insurance, when you have a permanent policy, accumulates a cash value account. So that's actually money that you have available to you to take as a withdrawal or if you'd like to take as a loan.
Okay. Some people might think it's too expensive for them to check into it. What would you tell somebody who's like, I'm good, I don't need it, I don't know if I can afford it?
Well, I would tell them in a lot of cases it's too expensive to not have it. For those people that need life insurance, and to not have it is going to be a much bigger cost, not to them because they'll be gone, but what they leave in their wake with their family. So always definitely worth looking at, but it's also not as expensive as people think. They're often surprised to learn because there are different types of insurance. There's multiple types, pros and cons to all of them. We can talk a little bit about that if you want, but the cost, can be very, very inexpensive for term insurance, which means I'm basically renting insurance for a period of time. Maybe while my kids are growing up, I buy a policy that covers me till they're adults. And, frankly, the likelihood of me passing away during that, let's say, 10 or 20 year period of time, it's slim, right? Because if you're younger, you have young children, chances are you're going to survive that. So the cost is very inexpensive. If you think kind of like car insurance, what's the likelihood of an event happening? And the insurance company, from a life insurance standpoint, does the same thing. What's the likelihood of this person passing away? So if they're 30 years old buying insurance for 20 years, they're probably going to be alive when they're 50. And so it gets priced accordingly, and it can be very inexpensive for that reason.
Does the premium that you pay go up as you get older, or is it kind of like a fixed rate that you pay for the term of it?
Right. So now is always the best time to buy insurance because it does become more expensive as you get older. You are locking in, if you buy a policy today, you're locking in that rate depending on the type of policy. But if we're buying a 20-year term, for example, we're locking that rate in for 20 years. However, insurance gets more expensive as you age. So if you're 30 and now you're 50 and you're losing that term policy and you buy a new one, it's going to cost a lot more than it costs you when you're 30. One, because you're older, but two, because maybe now you're not in as good of health as you once were. In the insurance company, it's not a pass or fail in terms of whether you're going to qualify for insurance. It's everybody's going to qualify, but on the scale. So everybody starts out at, let's say, standard. That's kind of the average person. And then from there, you're either more healthy than average or less healthy than average, and your premium is going to correspond to that.
Okay.
Now, if you have the fear of that cost increase, that's where we get into permanent coverage. And I think everybody should have some permanent coverage. And what that is essentially, I'm going to buy a policy today, and I'm going to keep it for no matter how long I live. I will always have the policy, and then it will always, of course, pay out. You asked earlier about what age is appropriate. So to put it simply, how I generally explain it to people is, number one, when you have a child, and this is something we didn't touch on, but when you have a child, insurance, we often look at that and say, we don't need coverage on our child. Nothing's going to happen to my child. I don't need coverage. I have insurance on my children. And the reason I have it is not because I think something's going to happen to them, but rather because when I buy a policy as a child, I can add what's called a guaranteed insurability rider. And so what that says is once my children are adults, they can go to the insurance company and keep buying additional amounts of life insurance regardless of their health.
Oh,
so
wow.
I've basically locked in. Remember I said your rating is going to be determined by your health, and that's going to affect your cost. What I've done is guaranteed for my kids that they can go get a policy when they're, and it's multiple periods of time in adulthood. So let's say at age 25, at age 28, at age 31, like every 3 years till they're 40. Or if they get married, have a baby, they can keep tacking on an additional $100,000 of coverage each time, and there's no question about their health.
For like each dependent too that they have as well? Like
no, this is for them. So
okay.
So my child gets married, has a family, needs more life insurance. Let's say, God forbid, he develops some sort of a cancer that makes him uninsurable. He can still go buy life insurance at that healthy rating to cover himself, protect his family, because I did this when he was young. So that's the big reason for doing that. Now, when you get to that age where you're married, you're starting out, you have the most debt you're probably ever going to have in the least amount of assets, especially if you're a one-income family, right? What happens if something happens to that income earner? We need life insurance, probably a lot of life insurance, more than we're going to need in the future. Yeah. So for that person, but they don't have a lot of money either, right? Because we're just starting out. That's where the term insurance fits. We can get the low-cost insurance. We can get a lot of it. We know we don't need it forever, so term fits. Now we get into our, let's say, 30s, 40s. We're making a lot of money. We want to put more money away. Maybe we've maxed out our retirement plans. Where else could we put money? Now we look at that policy, like you mentioned, that allows us to get that tax-free income. This is where the 30 and 40-year-olds start putting money away into life insurance, one, for the death benefit, two, maybe for those living benefits, but really so that when they get to retirement, they plan on pulling tax-free income out of that policy. Now we get into our 50s, we're thinking about retirement, or our 60s. Now we start looking at the policies that have those living benefits. We're concerned about long-term care. There's all the baby boomers today. We're starting to hit multiple, thousands of baby boomers per day that are hitting that age where this is becoming a concern. And they have parents that right now are going through those long-term care issues. Because if the baby boomer is 65, they might have parents that are 85 or, and they're in a facility getting care. So these baby boomers are realizing it's expensive. And if I have to take care of my parents, it's hard.
Yeah.
I'm 65. I don't have the energy to do it. So they're looking at what can I do to make sure that I can have this paid for me. And that's where they're looking at those living benefits.
Do you think it's changing between generations? Do you see more people buying life insurance now than previous years?
Well, you're definitely seeing more people focused on these living benefits. So it used to be that, life insurance was just life insurance. There's a death benefit, right? And most of the time in the past, it was the men that were working, right? A lot of times the mom stayed at home. Dads never think they're going to die, right? Men aren't going to die, so they're not going to buy life insurance. And what's the benefit to them? They don't get to enjoy it because there's nothing they can pull from that policy.
Right.
It's not like when I put money into an investment because I'm dreaming of what I'm going to buy in the future when I retire. I'm going to get a boat, and I'm going to sail the Great Loop and all that, right? Life insurance is just I'm throwing money away in their mind. Ask the wife, and the wife would say, I need it, right?
Yeah.
Now we're at this age with all these boomers where they're looking at their parents, and when we had COVID, if you remember, all states were different, but we had the lockdowns where parents were in nursing homes and the family couldn't visit them. That was a big shift in our industry to where now those adult children said, I don't want to be in that position. So I'm going to get a policy. I want somebody to come in my house and care for me as long as I can. I don't want to go there. So between COVID and the number of boomers that we have, that's been a big shift for these living benefit type products.
For maybe somebody who is interested in life insurance but doesn't know where to start or where to look or what to consider, I know that's a big generalization, but what would you tell somebody?
I would tell them to first talk to their agent or find a good agent. There's a lot of push today to go online, run a quote, right? But you're not getting the advice. And when you look at the numbers for life insurance, you might look at it and say, well, I've got 100,000 of coverage through work, that's plenty, or I've got 250, whatever the number is. But if you think about it in terms of your income, how long does that really last? If you have 100,000 of death benefit and you make 100,000 a year, what does that do for your family, right? You probably need 10 times or 15 times, depending on your age, of coverage. So you won't get that advice if you're just going on and running quotes. And then when it comes to these living benefit products, they're very complex. There's a lot of different ways to design it. There's a lot of different options. So you really need somebody that's in that space that knows what they're doing to get the guidance that you need. I saw one report here recently that, and I think you mentioned it to me, about the 47% of Americans, right, that have insurance feel confident about their future, whereas only, I think, 26% or so that don't. But the fact that 47% of the people that have insurance are confident means the other 53% are not.
Yeah,
right?
what's up with that?
So if you have insurance and you're still not confident, I would say that they probably are people that need to talk to their agent. They probably say, I have insurance, but it's through work or what have you. So really, it's talk to your agent. If you have a policy, I would also recommend that you ask your agent to review it. Because a lot of people, when you get your investment statements every quarter, you're looking at that. You're excited about it. When you buy a life insurance policy, you stick it in the drawer and you don't look at it, right, till somebody dies, or you're cleaning out the drawer and 20 years later you find it. Well, life insurance policies change over time. So if you have an older policy, you may not have these living benefits. So we could take your old policy potentially and use the value of it, put it into a new policy so that you can add those living benefits to it.
So that's something you should review. You should be reviewing your life insurance policy,
Absolutely.
not just getting it and, okay, we're good now.
Right. There's new features. There's rates change. Carriers are always trying to be more competitive. You might be able to save some money. So there's a lot of reasons to review a policy.
Yeah. Let's say you're like a single person. You don't have kids. You're not married. You might be thinking, like, do I need life insurance? What would you tell that person?
So again, it would depend on the particulars of that situation. If you have a younger person, what does the future hold? Do you think you're going to be married, having a family, what have you? You will have responsibilities down the road. Do you have assets to cover those, or do you need insurance? Or you might say, I don't necessarily need it, but I like the idea of that tax-free income. I make good money. I want to put more aside, so that would be an appropriate reason to have it. Or especially if you don't have family around you and you are in the 50s or 60s, who's going to take care of you? So that's especially a reason to look at a policy. When you look at the living benefit policies, a lot of them give you a discount if you're married.
Really?
And the reason why they do that is because they know your spouse is going to take care of you in the beginning. They know that your spouse will be able to do a certain amount of care before they have to come in and start funding, paying the bill, right?
I see.
So if you're single, you don't have that support. If you don't have children, you especially don't have that report. Maybe you have siblings, but they might be in the same situation as you.
Yeah.
So that would definitely be a reason to have it.
Yeah, the long-term care piece, I think, is huge.
Mm-hmm.
A lot of people just don't think about that or neglect it when they're planning until it's too late.
Right. Well, and with nursing homes, that can cost $10,000 or $12,000 a month.
Yeah.
That can eat your savings up very quickly.
Yeah. I know a lot of jobs, like in their benefits package, will offer like a basic life insurance that you can opt in.
Mm-hmm.
Should you go through your employer for life insurance, or is it better to go out on your own and branch, get more coverage than just that basic $50,000 that covers your funeral or whatever?
Right. Yeah, so a lot of employers will give you 1 or 2 times your salary. So, of course, that's given to you, so you're going to take it. But then they'll allow you to buy additional insurance without having to prove insurability, meaning they won't make you meet with an examiner to do blood work and, ask you a bunch of health questions. But that amount's usually kind of limited. It might be $500,000 or less. So, again, going back to the how much insurance do you really need, that might not be enough, but it's cheap.
Are they more restrictive?
Well, they won't have the living benefits. So generally, it's essentially term insurance, but the cost is going to go up. Rather than going up every year, they don't lock it in for 20 years like what we talked about earlier with the term. They do it by age group usually. So if you're between the ages of 31 and 35, you pay this. If you're 36 to 40, you pay that.
And it goes up as you...
It keeps going up. But the biggest problem with it is the portability, meaning that when you quit your job or lose your job or retire, that coverage is typically gone. So now you find yourself out there trying to get new coverage, and we go back again to now you're older, now you might have health issues. So it is generally cheap, so it's not bad to add on top of what you have, but I would always want to have my own coverage that sticks with me regardless.
All right, that does it for this edition of Not Your Father's 2 Cents. Sources used in this episode will be linked in the description. Thank you so much for listening, and I'll meet you back here next week.